Okay, here's the thing, Huami Q2 earnings were not great. I was actually really a bit disappointed here and it took me some time to, well, soak it up and digest it. But as outlined to my patrons at the earnings date, I haven't sold a share since. So in this video, I will be talking about the bad and the good and also tell you how my views on Huami have changed and why I still remain a position here. And also watch this video till the very end if you want to know what this has to do with my investments in Tesla and NIO. So in a nutshell, and to make it clear from the very beginning of this video as a spoiler, I do think Huami still presents a very good investment opportunity in the healthcare market in China and beyond that. And in fact, after the Q2 earnings, it may actually be one of the best times to get into it, but more on that later. So let's talk first about why I was disappointed with the earnings, and I've got mainly 3 reasons for that. First, Huami isn't growing as fast as I was expecting. In my first analysis, I was estimating that Huami could grow revenue this year by 30% year on year, and in this quarter we saw a mere 6.4% quarter-on-quarter revenue growth, down from 29% last quarter. The second reason why I was disappointed is that Huami has gotten much less profitable. In my benchmarking with competitors, Huami stood out as a fast-growing company while maintaining a roughly 10% EBIT margin, and to see this drop to 1% this quarter was a huge disappointment. And the third reason, and this somehow doesn't surprise me anymore with covering Chinese companies, is that they didn't announce their cooperation renewal with Xiaomi. Remember, their partnership contract ends on October 2020 and is vital to more than 70% of Huami's entire revenue and possibly also their profitability. It would have been a really nice timing to announce it prior to the actual due date, and I think many investors are still eyeing this important milestone. Being used to such sloppy handling of Chinese companies of important milestones like that, I can't be surprised actually, but still I was hoping for real news, and on that front, to be honest, I was disappointed. Now in combination, these reasons really made me rethink my investment strategy in Huami, because this was kind of a worst case scenario for the Q2 earnings. However, the deeper I looked into the earnings and the information that I got during the earnings call with the management, the more I actually developed my views that Huami remains an extraordinary investment setup. And actually looking back at the earlier days investing in Tesla and NIO, this somewhat looked similar, because that journey was never smooth or reliable either, and I remember great uncertainty about Tesla Model 3 demand and cancelled earnings call by NIOs, or times they only had a 1 quarter cash run rate. But in retrospect, of course, these were the times when you could have picked up those companies on the cheap before they actually started rallying. So is Huami similar here? I cannot say it for sure, but well, let me tell you a couple of things that are keeping reminding me of that. First, on the financials, looking at the quarterly results is oftentimes misleading and can show seasonal trends that get equalized over the annual basis. And similarly with Huami, in the past we see stronger revenues and better profitability during Q3 and Q4. Also, Huami management had good reasons to justify the seasonal effects in Q2. First of all, still we got the Roni situation, and it seems larger parts of Huami's business is now happening in Europe and the US, which are yet to recover fully. And in addition, Huami and Xiaomi pushed sales of Mi Band 4 with discounts to clear the inventory before now launching the Mi Band 5, which has a higher price tag and hopefully also should have higher margins. So not only management guided for it, but in general it should be expected that gross margins pick up in Q3 and Q4 as well as the revenues, and also we should see cost expenses for R&D to come down a bit, especially when Huami launches new products in the second half of the year. Speaking of new products, Huami announced a couple of news that on the products and partnership side, which made me quite curious and excited. First, they're kicking off the ZEPP brand, which looks like a step into the right direction. Taking a look at their website, it becomes clear that Huami is looking to access a new, maybe more lucrative customer segment. And honestly, it seems like this new brand is directly challenging the Apple Watch. Although pricing has not yet been released, yet we can see that the design looks incredibly premium, and just looking at the tech specs, it could become a powerful rival to the Apple Watch, just when comparing, for instance, the battery lifetime as well as the display specs. I'm currently owning and testing the Huami Amazfit GTS, which is priced more for the mass market at 160 euros here in Germany, and I can say that I'm really impressed by the functionality, the cost-benefit ratio, and things like the long battery lifetime. So it really seems to me that those product fundamentals of the company with the biosensors, the trackers, their self-developed AI chips, their software and the user base, these are all strong and won't go away with a bad quarter. And then seeing these steps taken by the management combined with starting to using their products may have instilled more confidence in my investment in Huami. And furthermore, it seems like Huami is pretty active in doing collaborations and investments, which is a good sign in my views. Huami really has a strong mission and vision with the statement to connect health with technology, and they are executing on it. So in my views, Huami has left a hardware producer station and is on the road to become a platform, an ecosystem and a tech-enabled company with their own software stack and algorithms in combination with the medical-grade hardware. So they are not only developing their own chipsets, algorithms and new functionalities like blood oxygen measuring, they also announced partnerships with universities, research institutions and companies in a healthcare ecosystem. So for instance, Huami is cooperating with the insurer Prudential Corporation Asia to combine it with their health tracking, and one of the nuggets of the Q2 earnings actually was that Huami possibly has acquired Pi Health. And Pi, as outlined on the website, is an activity metric backed by science that guides you through optimal cardiorespiratory fitness levels, and research has found that maintaining a 100 Pi or more is associated with reduce of cardiovascular diseases mortality by an average of 25%. So the purpose and research behind Pi was to develop a single, easy to understand activity tracking metric that could help people manage their health. And today Pi is already implemented with Amazfit apps and can also linked to Apple Watch or Fitbit, and as mentioned is now also taken up and in part of these collaborations with the insurance providers. So should Huami really have acquired the startup, that could be really an exciting deal for the future. And during the call, Huami management mentioned 2 times that Pi is actually a whole owned subsidy of Huami. And I did some digging, but I couldn't verify it anywhere. So there's no official news or announcement whether it's from Huami or from Pi side or anything that could be found on the net so far. So I will dig deeper and cover the topic in more detail soon, but well, it was definitely one of the bright spots of this earning calls here. And furthermore, Huami is partnering with Aspen Imaging Healthcare, a medical device manufacturer, possibly bringing maybe some of the benefits of X-ray even into a consumer-facing product, who knows. So some of these collaborations and benefits may not materialize until a couple of years down the road. However, in my views, the direction is becoming apparent, and I think the outlined path is the right one to take. So in general, I can take a weak quarter even if I have to defer my 2020 price target here for a bit. I mentioned before that I think HMI should be trading at $60 a share, and my views that Huami is undervalued has not changed. However, if revenue growth and profitability doesn't come back to where it was in 2019, it may take Huami a much longer time to actually live up to this valuation. Still, the inherent potential of this stock is amazing. And the fact that Huami has so far bounced off the $13 mark tells you that there is a solid support around this area, and that investors do to some degree agree with the fact that the weaker earnings are somewhat seasonal, maybe COVID related, and overshadowing the growth to come in the next years or maybe even already in the second half of the year. I personally think anything below $20 is buy territory, and I will possibly accumulate more during the Q2. None of this is financial advice, it's just how I am looking at this, and after the earnings have been pretty weak, and I think if the earnings wouldn't have been that weak, that we wouldn't even have this kind of opportunity to accumulate more right now. However, I also will become more cautious to material announcements around the Xiaomi partnership, which Huami, I think it really needs them to become profitable, as well as strictly watching the marketing and operational expenses of their own Amazfit brand, because this still is to me pretty much a black box of how the Huami Amazfit brand is doing separately besides the Xiaomi sales channels. And to be quite honest, I do expect a little bit of a bumpy ride from here, and bad news on these key metrics or market pullback could actually make HMI tank to its all-time lows. There's no doubt about it. So therefore, I now regard the investment to be a little bit more risky than it was before, however, not less attractive to me. And judging a little bit from my investment in Tesla and NIO, it was kind of always like that. Looking back, I wish I invested even more in NIO in late 2019 or in Tesla when it crashed during the market crash, but it takes lots of courage and a good personal risk management to do so. So honestly, I prefer to get in over time, to buy in tranches bit for bit and sometimes average down, sometimes average up in order to build a full position. And as long as the fundamental thesis of my investment in Huami hasn't changed and there is no break of that, then I will be going down that road. So please follow and subscribe and like the video if you go down this road with me, or at least you're following it. I will be digging deeper into the company and cover them more, and also of course let you know whenever I buy or sell their stock. And yeah, this is it so far from my side. Let me know what you think about Huami as an investment. Maybe you are already invested or you are hesitating and maybe getting even more cautious right now after Q2 earnings. I'm interested in learning what you think about it. And yeah, with that, thanks for watching the video and see you in the next one.